Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And thanks for joining us here at Mike on Money, where we talk about everything that's going on in the markets and what we see coming up in the markets for this week. And today, we're going to do a bit of a summary on the mid-year update and kind of the outlook for the second half, as we are in the middle of the year and summer is upon us officially now. So we'll dive right into things this week. As always, everything in these videos are for educational purposes only. Always do your own due diligence or reach out to us at mikeonmoney.com. Happy to look at your individual situation and see how some of this information or any other strategies might apply to your personal portfolios or would fit into your financial plans. But always look into it. And we do try to keep the information as accurate, as update as possible. But of course, things are always changing out there in the market, so always confirm all the information before applying any strategy to your plans. As always, if you're listening to us live here, you can click that Q&A button and put in your questions or send them in to us or just reach out to us. If you're listening to the recording or our podcast, go to mikeonmoney.com at our portal there, and you can access us through all our social media portals or direct links on there to get a hold of us right away. So let's dive into what we've seen coming up this week. We're looking at the May U.S. housing sales, so the existing home sales. So last week we looked at the new starts. This is for existing home sales for May. Still seeing some strong numbers there, and still seeing strong numbers in Canada, although definitely pricing is, and volumes are, pricing off the peak, volumes are pretty high. So we're expecting similar trends down in the US around the housing market. Stock futures ticked down slightly after a big day on Monday. Pretty much for the last 2 weeks, we've seen a bit of up and down. We've been talking about that, just absorbing some of those inflation numbers. We'll dive into those numbers a bit more detail here coming up. But also, summer doldrums, summer months, volumes tend to fall off, especially with the big reopenings happening in different parts of the world. We are starting to see a little bit of those volumes fall off a bit. Not a big concern, as we'll dive into kind of the bigger trend that continues in the markets these days. Same applied for Dow, and S&P ticked a little bit lower, as well as the NASDAQ. So other things we're seeing out there, the Fed's big tent framework may fray under the inflation surge. So much like we saw in Canada, remember we talked about this, we were expecting a big surge in the inflation numbers as things reopened, and then level it off a little bit for the balance of the year. Same kind of things happen in the US. So the US, of course, has been very focused more on a job-first monetary policy, trying to keep inflation out of things, keep interest rates out of things for as long as they can. They are finding, of course, inflation is rearing a little bit of its ugliness, and they don't want to let it get out of hand, much like we've seen in Canada. So we'll dive deeper into these numbers further in today's recording, but not to be overly concerned that this was kind of expected with the reopening. U.S. employers are wrestling with the COVID vaccine requirements. So this is just around, we're seeing this in Canada as well. We're seeing this reopen. Every province is slightly different. A lot of employers have people across different jurisdictions, different rules in different areas, different availability of vaccines in different areas. The farmers, obviously, with their seasonal workers and laborers, very, difficult to try to figure out what the rules are, but then getting all their workers up to those standards. But I think we're going to start seeing a lot of this as the reopening starts happening. Corporations that have had a work at home policy, or even those that had the voluntary work at home, as they look at bringing workers back. The first big thing we're going to see is who comes back, because some of those jobs are going to remain remote, or the option of remote, which is going to be good, but it's going to be transformative. As so a lot of those people, depending on where they live or where they need to live, because they might not have to be in those commuted distances anymore, And then those who are required to go back to work, we've seen a lot of them saying, "I'm not going to." They're just going to quit and find a job that continues to be remote, or that allows them to be remote. So the employers might have some challenges around that. But then also, when they do say we're open for business again, what are going to be the rules? Because not only do you have your jurisdictional rules to deal with, depending on what province or state or city that you happen to be located in, but then you also have, sort of duty of care, right? As they reopen, they want to make sure the policies they put around reopening are safe for their employees, because the last thing any company wants to have is a big outbreak in an office or in one of their establishments, because then they get shut down again, and back and forth is not what anyone wants to achieve. So I think we're going to see a lot of news and a lot of announcements around companies, how they're going to approach these reopenings, what policy is going to be made, and what that's going to look like. And I don't think too many companies are out there panicking to be first. I think they want to see what other people come out with, and then maybe try to copy something that looks good. Anyway, moving on. Global passengers aviation, uneven recovery from the pandemic. So global passenger aviation is making an uneven recovery from the pandemic. Obviously, some of the major things, around different country travel, domestic travel, short and long haul flights are all different. It's been patchy at best, with some areas or some places like in the United States, some cities, the flights, local flights pick it up dramatically. But then, especially on the international side or the long haul flights, there's still a lot of uncertainty, not just around directions and rules for your country or location as far as departure and return goes, but also where you're going, right? Like what's going on at your destination? What are the rules there? What's the situation? What's the state of their vaccine rollouts? Has a lot to play here. And I think that's going to continue for the most of 2021. Is global passengers are going to have a hard time really getting back to normal, or kind of that quick decision to say, hey, I'm going to go there or I'm going to go here, because there's a lot more involved in it than just what your local environment is. It's really more about where you're going and what that means when you're there. The feds, we talked about this last week as well. The Fed officials, are really taking a look at their, tapering the bond or the Federal Reserve's massive economic liquidity structure that they put into place. Basically, of course, through all this pandemic, the Fed Reserve has been buying up and shoring up credit quality in the bond market. They want to taper this off. As the economy recovers under its own merits, they want to taper that off and let the economy run it on its own, and have the liquidity of the market being driven by growth in the economy. And of course, a lot of things that they learned from the 2007 to 2009 recession, where the financial crisis took place, really helped at the beginning of this pandemic, right? Their quickness to provide liquidity to the market, their quickness to get the stimulus packages out, all helped prevent a big drawn out recession when the economy quickly closed down. But this reopen is going to be a little bit different because the rollout has been different, and so is the reopen. And obviously, it's taken a bit longer for the reopening and restarting of the economy than it did back in 2009. So there's a lot of news coming out of the Reserve around this. Well, of course, we'll stay on top of it as those developments come out. Biden is still going back and forth with Congress around the infrastructure package and how to pay for that. A lot of back and forth, a lot of pushback from the Republicans. And I don't think this is going to go away. The lawmakers in the Senate, are, hesitant to approve. They've come back and forth with, they're still pretty far apart in the negotiations. So I think this story is going to go on for a little while. U.S. Supreme Court rebuffs issuers on an Obamacare reimbursement. So if you've been following this case, This was all around Obamacare and about getting reimbursements from the federal government under the provisions of Obamacare. And that was rebuffed by the Supreme Court, refusing to hear the case. So this is good for keeping Obamacare in place in the U.S. And you know, as many times as they've tried to, even when the Republicans had power, they couldn't get this out. And this is with a Republican bent court and the new U.S. Supreme Court. Still, it remains and continues to stay in place. The climate is big on the agenda with Biden as he prepares to meet with top financial regulators. So, you know, Biden's get together with the regulators to discuss, you know, how they're going to deal with regulatory environment in the United States, especially around finances. You know, back in, we mentioned 08, 09, regulation tightened up a lot in the financial crisis. Until the last administration, it really loosened again, and Biden's looking to tighten some of those up. He already's done that with some special orders and executive orders, rather, and he's looking to meet with regulators as to how this is going to look going forward. And obviously, a lot of focus around climate change technology and providing credit and funding for those initiatives. As far as COVID goes, of course, we're all getting happier and happier as we continuously hear more reopenings. As far as, you know, here in BC, of course, we can have events up to 50 people. The second vaccine rollout is going quite well. I'm a two-timer now. I've got my second vaccine. So more and more people are getting that second shot. We're well into the mid to high 70s percentile as far as the first shot going here, BC, and I believe I saw Canada overall, we're over the 75% mark. Back east, we're seeing reopening in Ontario, Quebec. The Maritimes have reopened for maritime travel, and I believe it's going to be beginning of July. They're going to open for Canadian travel anyway. And of course, Canada has announced now for those who have their 2 vaccines, will be able to skip the quarantine if you travel globally. So you'll be able to do global travel and return without doing the hotel or the 14-day quarantine at home if you've had your 2 shots. Now, there is some policy and procedures around that. I won't go into all that, but definitely look it up if you are planning any travel, providing proof of your vaccines. And you do have to register on their ArriveCan app to show that you've got your vaccine and your situation and get that approval in place. So make sure you double check all the approvals and also double check your vaccines, not just for Canada, of course. Canada is allowing this for those who've had vaccines for any of the approved vaccines in Canada. The big one there being the AstraZeneca one, because that was not approved in the United States. So as we see these things reopening, again, keep an eye on your destination and what their rules are. Because in some states where they're reopening their venues, they're reopening entertainment and sports to those who are fully vaccinated. There was one example, I think, last week on Broadway, where they reopened Broadway for live viewing, but everyone had to provide proof of US approved vaccine. So those who had the AstraZeneca vaccine were not approved to go to that particular show. That's not the case for everything. And obviously there's a lot of negotiations happening between governments around how they're going to deal with global vaccines, because it's not just the ones here in Canada and the United States. Of course, there's the Russian Sputnik vaccine, and of course China, and all around the world have different approvals and how they're going to be handled around these reopening plans. Not just for travel, but for venues when you're in those other countries. So just make sure you do your due diligence before you go on to any international trips and understand where your vaccine, depending on which one you have, is being treated at. Let's take a look at the US. The Fed Reserve, as mentioned, there are a lot of talks going on around the schedule of the coronavirus reopening and inflation and interest rate numbers, and that's going to continue. As I mentioned, we're looking for existing home sales data out of the US. We are expecting to, again, to be a very strong number. about 5.7 million after the month before being 5.85. Still, very strong record numbers down there. And the Federal Reserve in the different states are, of course, having a lot of meetings and discussions around how the liquidity, the continuation of liquidity, and how they're going to taper off into an economic growth cycle. Big US retailers are lining up to deal with Amazon Prime frenzy, which was yesterday and today. Canada's got postponed, I guess, because our reopening across the country isn't in full swing. They said to protect their employees, they're going to postpone and schedule another day for Canada's Prime Day. If you're not familiar with Canada's Prime Day, it's a big sale they do once a year on Amazon for Prime members, where they discount a lot of their products, kind of like your Black Friday for Amazon. And Canada's has been delayed, so I'm not sure when that number is going to happen. But obviously, all retailers try to line up deals on the same day to try to attract some of that shopping dollars. Exxon's AGM finally figured out their new board of directors as they were going through a bit of a battle, tallying up the votes to figure out who is going to be the chairman. Turns out to be Steve Kandarian, ex-MetLife, to take over the seat after a battle with a former Caterpillar chief, as they did from the preliminary count on that. And this was really around the direction of the company. And obviously with all the big oil companies or energy companies, it has been around shifting technologies, moving away from pure fossil fuels and expanding the revenues to represent a more diverse energy platform as the world is shifting that way. We've been talking about it for years, and certainly over the last couple of years, as that push is getting stronger and stronger. 13 organizations have allied with the high-tech companies, to push the U.S. Congress to drop some of the more far-reaching antitrust bills. Of course, we've been covering this for months now. There's a lot of antitrust bills out around the world. In the EU, there's several. In the US Congress, there's several, and they're mounting. And this is just around the tech companies' use of personal data, and not just how their access to the data, how they're using that data, but more so how they're using that to push out competition or to reinforce their stronghold against smaller competitors in their individual markets. So there's a lot of groups out there who want to keep some of those things in place for the high-tech companies, just because obviously the bigger ones bring out a lot more new product. But we'll see how that progresses in Congress. CNH Industrial struck a $2 billion deal to buy Raven Industries. This is, I think, the third kind of consolidation restructuring we've seen in the global agricultural equipment business. And this is an Italian-American vehicle maker where they're spinning off one of the lines to focus on trucks, buses, and industrial engines, while the other focuses strictly on agriculture. So a little restructuring going on in that industry as we've seen a surge of spending and upgrades in that sector. Airlines and the unions are pushing U.S. prosecutors to really focus on egregious onboard conduct. And if you follow the news around travel at all, there has been a massive surge in this, not just during the pandemic or during obviously the travel restrictions we've been under, but even pre-COVID, we were seeing a lot of increase, certainly from my perception, we seem to be a lot of increase in airline passengers not wanting to follow whatever rule might have been in place, and also the airlines not necessarily applying those rules uniformly, and which led to some altercations or bad situations, if you want to call it that, of having to remove people aggressively from planes. Not working out well for either side, neither the passengers nor the airlines. And obviously that's not gotten any better through the pandemic, as people now have, of course, the mask mandates, of course, the test requirements, the vaccine requirements, all these things are only going to increase that animosity or that tension for those who are against those rules, right? Those who don't want to get a vaccine, those who don't want to wear a mask, et cetera, et cetera. So they're really pushing for the U.S. aviation to have the Attorney General really put, more teeth around the rules, or more consequences to those who violate the rules, to help enforce that. Now, that being said, hopefully there's some on the other side as well for airlines to be more consistent about those rules, and make sure that they're applied fairly, and in a way that people aren't, passengers are being massively inconvenienced, and then also people are getting hurt. So we'll keep a close eye on that, especially as the airways start to open up again. Coming up in Canada, nothing major announcements this week. Of course, we're watching a lot of different things going on. The Bank of Canada is, looking to break its sequence of lower terminal rates as the governments start to splurge out there. Households are flush with cash. Investors are betting on the Bank of Canada's next tightening cycle, expected, as I mentioned before, kind of the beginning, middle of 2022, where interest rates could climb, to the previous peak. Now, keep in mind, when we say it's going to start to climb, I don't want people to too much panic about that, because if the economy is growing at a healthy rate, it should be able to absorb it. And remember, we've had a big cut in 2020 in those rates. So even if we get back to pre-pandemic rates, it shouldn't slow down the economy that much. We should still see real growth happening in the economy, but obviously we do need to see that inflation numbers come down a bit. Soaring costs are challenging for retailers as they're out there trying to reopen and pick up on this post-pandemic rebound, as things get back to normal, and all these Canadians who are flush with cash go out shopping again. They do have added costs. A lot of people shifted to online, which of course there's shipping costs involved there that erodes profits. More cleaning costs, precautionary measures, even as restrictions lift, there's still a lot of those things in place. And of course, inflationary pressures around their products or raw materials for their goods are really pushing up costs. But it's a very competitive market out there with the online shopping being so prolific. Price matching becomes even more difficult to compete against. And on top of that, as we've talked many times, with the bit of stall, the backlog on the manufacturing side, there is driving up some costs on finished goods. So all that is pushing a little bit of more stress on retailers as they reopen, but hopefully we'll get through that surge and things will slowly return back to normal levels. As I've already talked about, Canada lifting their border restrictions on July 5th. That's great next step for next month. That's for those fully vaccinated. So if you haven't got your second vaccine yet, do get out there, or I'm sure you're registered, and get out and get those. And then hopefully we can start traveling again. But as I did mention, keep a close eye on what those requirements are, because they have been so far subject to quick change. So stay on top of those. Canada's Transat ends takeover talk with Quebec businessman Palado. So Transat, if you followed this story, we covered it a couple of times through 2020 and into 2021. Of course, Air Canada had a deal to buy them out pre-pandemic. That got renegotiated during the pandemic, the price of the takeout, and then that stalled, and Air Canada walked away, probably rightfully so. Why would they take on more debt and more capacity when they're running at I don't know, a very reduced capacity? I'm not sure exactly what percentage they're at these days, but a much reduced of their own capacity already at the moment. So Transat's been out there looking for a new buyer, and continues to have trouble, which is not surprising. Who wants to take on an airline at this point in time, given the current situations? On the foreign exchange front, the dollar continued to struggle a little bit after a little bit of gains on the Fed meeting. This is going to continue, of course, with inflation and debt pressures in the U.S. The bond yield breached just over the 150 level. Still remaining very low, as far as certainly not in any warning area for us. And the Canadian dollar, I believe, was at 81.1 today, or earlier this morning anyway. So things continue there. We did see, of course, to keep you up to date on Bitcoin, we did see a break through the 30,000 level. So pretty much wiping out all of 2020's gains in Bitcoin as we saw that pull back, mostly on the news, China continuing to shut down any cryptocurrency activity within their borders. And also, I believe it was Iran also putting a stop to a lot of crypto activity. So we'll continue to see that. On the commodity front, oil breaking to its highest level in 2 years through the $75 level on optimistic numbers about reopening and continued increase in demand worldwide. Copper inched back higher after having a pullback from its highs, and gold gained a little bit early in European trading, just on inflation outlook. So let's take a look at where we are in the markets and where we expect it to go. Obviously, the overall financial markets have been strong over the last year and a half. We have seen a little bit of stalling in growth, as I mentioned, mostly around kind of just absorbing some of this inflation pressures and taking a little pause for the kind of the summer months, or certainly June. June tends to have that effect on the markets, slowly picking up going into later July and August. So nothing unexpected there. Wouldn't panic about that. We are seeing core inflation spike to some 25-year high levels. As I mentioned, this is the reopening spike. We knew that was going to happen. We didn't know exactly the levels. We've seen that now. As long as we start to see those coming down, that should not be any concerns. And again, we're seeing that continued jobless claims start to creep lower and lower, which is good. And that says the pandemic job losses get reabsorbed and continue to pick up as the economy expands again. We are looking for a strong economic growth well into 2022, and it's mostly around this global money supply, right? Don't look at Canada, but we have this global synchronization of money supply and liquidity around the world, just basically making it easy for companies to expand and grow and let the economies continue to recover. Long-term inflation is expected to hit its highest levels since 2012, as we continue to see core inflation rise throughout the year. Again, after we hopefully see a pullback through the summers. And obviously, the U.S. Fed and Canada are on top of these. The global banks are watching them very closely, really looking to offset any kind of hyperinflation, as we did see those levels drop to kind of mid-70s levels. Central banks have been providing significant stimulus out there to keep that money growth and keep it at a historical high as we get through this historical period of shutdown for the economy to continue its recovery. And there's really no incentive for any of the central banks out there to want to slow this down. There's no knee-jerk reaction for them to say, hey, first of all, just because inflation spiked for a month or two, they're not looking at it and saying, hey, this whole situation's over. The economy is flourishing. We can turn the tap off all at once. This is going to be a slow, steady trickle for a while as they let that real economic growth take hold, because they've been stimulated, right? There's no secret behind that. In 2020, it was largely driven by economic stimulus from the governments, and now it's started to take hold. They're not about to kick that out, pull away the rug, as it were, and have it falter again after all the money and effort that went into keeping it going. So we do not see 2020 seeing that falter. We do see it starting to taper off. into 2021, late 2021 and into 2022. But that's where we'll see the real growth take hold, and we'll be able to focus on those sectors and those economies as that happens. We are, of course, keeping an eye on the key metrics, the vaccine rollouts. I've mentioned many times before. It's been great to see it in the developed countries and how it's been exceeding our expectations, certainly from the beginning of the year to the middle of the year. Our conversations in January about the vaccine rollout, whether here in Canada or anywhere, is very different from where we are positioned today. I don't think that success or percentage of success was what we were predicting back in January 1st. So that is really helping. But now we're turning our sights away from those countries and into the rest of the world, and seeing how that's going to turn things around, and also stop looking at that surge of reopening, because that's already started to happen. What we're looking at is where are we going to level off, and what sectors are going to be the ones we want to focus on as we move past that initial surge of household savings that's been pent up through the lockdown there. So that's where we are. That's where we see things, all very positive. Love to have your questions and feedback. Go to mikeonmoney.com. Let us know what you're thinking, what you'd like to hear more about. We did put out Monday our 4th and final installment on Bitcoin on our video series. And next week, next Monday, we have a deep dive into where, how to save especially for higher income earners, how to save beyond kind of the RSP and TFSA. If you're an aggressive saver, or you've got savings beyond those two, how do you position that to still have effective tax efficient growth? So we have a video coming out on that. So we'll look forward to your comments on that one. So with that, go out there and enjoy all the sunshine we're getting these days. Stay safe. Of course, it is scorching hot. It goes from rain to hot here in Vancouver, and I know the rest of the country and in the United States are seeing this heat wave as well. So stay safe out there, and we'll talk to you again next week. Thank you, everyone.